What's good? What's good? Welcome back to Invest and Trade with Jax. Hope everybody's doing well. Good morning from Johannesburg, South Africa. We're going to go over our friend Matic. Currently, we're sitting at 64 cents. We're seeing a little bit of a relief bounce. We're up 9% on the day. Seeing a market cap of 5.06 billion, 24-hour volume 399 million. So we'll hop straight into Matic. We're going to start here on the daily time frame. So I have been going over our Elliott wave theory with you guys. Our impulsive wave 1, corrective wave 2, impulsive wave 3, corrective wave 4, final wave 5. And I do believe we're going through an irregular ABC correction, bringing us down to that 32 to 46 cent mark. And right now we're going through our C wave of the correction, which has 5 waves. So you have impulsive wave 1, corrective wave 2. I do believe this was our wave 3. We're going through that corrective wave 4, and we may just be starting wave 5. And I'm going to zoom in here to tell you guys why I think we may be starting wave 5. Just going to quickly close my indicators here so it's not distracting. I'm going to open this up. So we've started to break down from this symmetrical triangle, and it looks like we've gone through an A, B, C, D, E, corrective Elliott waves triangle, and we've started to break down. And we may be looking at our wave 1 within the 5th wave has 5 smaller waves. So we have wave 1, we're going through the wave 2 pullback. We come down and we make the wave 3, we have the wave 4, and of course the final wave 5. Now the wave 2 pullback, it usually retraces in between the 0.5 and the 0.618 on the Fibonacci. So if we go from the swing high of the wave 1 down to the swing low, you can see we're perfectly reaching the 0.618, and we're also hitting resistance of this symmetrical triangle. So if we begin to roll here, that will have completed wave 2. And how to measure your wave 3, you can either use the fib retracement or you can use the fib extension. And what you do is you measure wave 1, and your wave 3 usually falls in between either the 1.618, the 2.618, or in rare cases it extends all the way down to the 4.25. But usually it ends up in the range I found with crypto, in between about the 2 and the 2.618 for the wave 3. So I'm just going to move this up a little bit here. So that wave 3, I can actually move this price target down a little bit. That wave 3 could end up in between about 45 cents to about 39 cents here. So if you see us get rejected here and we come down and we lose this low, that's when we'll come down and fill this wick and see that continuation down to the wave 3, see the wave 4 correction, and of course the wave 5 that could bring you all the way down. Actually, I'm going to move this down as well. In between that 30 to 45 cent price target, I do think we're coming down to the low 30 cents. If we pop this back open to the daily time frame, just so everything's more visible, these are the 5 waves within the larger 5-wave correction, and brings us down to that support level in between about 30 to about 44 cents. I'd be very surprised to see Matic bottom out about 45 cents. I would expect it to come down to the swing low in between about 30 to 45 cents. Of course, it's just theory based, but if I quickly remove the Fibonacci here, as I've been mentioning, we're consolidating and allowing the 20 EMA to catch back up to the candles. So over the next few days, if the 20 EMA comes down, we get rejected off the 20 EMA, that's when we're going to roll over and complete this 5-wave structure. The way to invalidate that is to push up, break above the 20 EMA, break above the high of the symmetrical triangle, and then we'd have to be looking at a larger 4th wave correction, in my opinion. But as of right now, we've gone through an A, B, C, D, E. We've fallen out of the triangle. And in my opinion, we've come down and made our wave 1. And we're seeing that corrective wave 2. If we get rejected, we start to roll. That's when we'll come down for our wave 3, in my opinion. Of course, anything can happen. We could come down and fill this wick and then bounce back to the upside. But as of right now, it does look like this is playing out, in my opinion. And as I mentioned, the way to invalidate that is to push back above the 20 EMA and break that wave 4 high of the symmetrical triangle, and then we'd have to restructure the wave 4. So we'll pop into Ethereum, but a quick shout out to today's video sponsor, Crypto.com, the world's fastest growing crypto app. They have their incredible Visa card for cashback in crypto, free Spotify, Netflix, Prime, travel incentives, Crypto Earn, where you can earn incredible interest on staking your coins. We have 12.5% for our friend Matic. Where are we here? Where are you, Matic? And we also have some where's Matic? Okay, here, Polygon 12.5%, Polkadot 12.5 as well. And the DeFi wallet, Your Keys, Your Crypto, where I stake all my CRO for a 12.5% return, and Atom for around 15 to 16%. Incredible place to earn some interest on staking your coins. You get $25 just for signing up through my referral. Highly recommended. Top link in the comments. So let's jump over to Ethereum. We're going to start here on the daily as well. So as I mentioned in our Bitcoin video, I do think Bitcoin is going through that wave 4 correction of a much larger Elliott wave sequence. points, taking you all the way up for Bitcoin in between the 2 and the 2.272. Now for Ethereum, that would be coming in around 24 to 52K, which is of course a possibility. But I think for ETH as well, we're going through that wave 4 correction and a regular ABC correction, bringing us down to the 1300 price target, maybe a little bit lower. We'll get into that here before seeing that final wave 5 that could take you all the way up to the 1.618, 8,000, the 2 extension at 24K. You have the 2.272 all the way up at 52K, but I would think in between probably around 8 to 24K for ETH. So if we zoom in here for Ethereum as well on the 4-hour time frame, I do think we're seeing the exact same thing as we've been seeing here for Matic. I'm just going to open this up. So we've gone through an Elliott wave triangle correction. Wave A, B, C, D, E, we've broken down, and I do believe this is the wave 1. So if I pop the lines open here quickly, I just take them out so it's not so cluttered here. So this could be our wave 1, and the wave 2 retracement is usually in between the 0.5 and the 0.618 on the Fibonacci. So if we take our Fibonacci here from the swing low to the swing high, you can see we're right in between the 0.5 and the 0.618. You can push up to the 0.786, but ideally you would get rejected by the 0.5 to the 0.618. So if we get rejected here, we start to roll. That's when we could come down for our wave 3. And you measure the wave 3 by taking your Fibonacci from the low of the wave 1 up to the high of wave 1. And usually I find it will come down in between the 2 and the 2.618. So we have the 2 at about 1390. The 2.618 is all the way down at 1228. I think it will probably come down in between the 1.618 and the 2. And we might see a final wave down that could take ETH a little bit lower than my price target to about 1242. If we scroll back here on the daily, I'm just going to quickly close the RSI here. If we scroll back, I'm going to drop in. There is some support in that range. I'll drop in a little box here and we'll just pull it out. So you can see there is support in that range, which is coming in here in between about 1192 and about 1040. We could definitely bottom out and see a smaller wave 5 at about 1328 or come down to that next support box here for Ethereum. So we're going to pop back over to the 4-hour. So if you do see a rejection here, even if we push up a little bit higher and we get rejected, we start to roll, I would expect you to come down for a wave 3. That could take you down in between about 1326 and about the 1.618 about 1501. So do keep an eye on that. Usually your wave 3 is the longest, so that's when we may come down to that 1346. We have our wave 4 pullback followed by the final wave 5, completing the larger 5-wave structure to the downside before seeing that push back up. And once again, jumping into a bull market. Just remember that none of this is financial advice. It's just my opinion. So always take it with a grain of salt. I'm not your financial advisor. I'm just a young guy from Canada. So the way to invalidate that would be to push up and break that wave 4 high, and then we'd have to restructure the wave 4 as a larger correction, quite possibly up to about 2131 and about 2380. But as of right now, it looks like this Elliott wave sequence is playing out perfectly. We broke down from the Elliott wave corrective triangle, and it looks like we're just putting in our wave 2 pullback before coming down to create that wave 3. In my opinion, it can be invalidated if we push up and we break above this triangle, but as of right now it is playing out. So we'll quickly look at this chart as well. If you were seeing this as some sort of bear flag, usually I like my bear flag patterns to be facing upwards, but if we do look at this trend line of resistance, you can see we are pushing back up to back test it, as well as the 20 EMA is coming down. So over the next few days here, if we get rejected by the 20 EMA, that's when we can come down and create that wave 3. And we do have a breakdown target if you are considering this to be some sort of bear flag. That would take you down to about 1353, which is that level of support that I've been covering here on the channel. So that's it for this one. Big shout out to the Discord. Over 1,900 members posting chart patterns, talking all things crypto. And we have the DCA trade strategy fully explained. Very simple method of trading. Buy and take profit zones if you want to start dollar cost averaging into your altcoin positions. And my trade signals, my exact entries, exits, take profits coming in at the $10 membership. You can sign up through the Patreon. Make sure to sign up to Bybit. That's where I do all my trading. Check out crypto.com, and I'll see you in the next video. All right, much love. Take care.